Go for it.
Perfect. Well, welcome everyone. Thank you for joining us for our Business to Brew seminar. Tonight we're going to be talking about QuickBooks, the advanced version. And this is part of our QuickBooks series that's happening every Wednesday night. And I will share the full list of the rest of the series in an email following in case there was anything else you wanted to learn, perhaps some payroll in a few weeks as well. So if you're not familiar, Business to Bruce is a program to attract, support, and aspire entrepreneurs as they go through their business. And we're run through the Planning and Economic Development Department at Bruce County. We also run the Business Enterprise Center that runs numerous programs, grants, and different support services, including one-on-one supports and these training seminars that we have today. If you have any questions about building your business, other resources that you might be able to access, definitely encourage you to reach out. Once again, I will send some follow-up information. And you can email us or phone us. And this will be recorded, as we have mentioned, so we'll be able to check back in if you have any questions or need to go over some of the information afterwards as well. I'm going to hand it over to Sandi. We're really happy to have her here with us today. She's going to go through our presentation and help with some of our questions. Welcome, Sandi.
Thank you, Christina. Hello, everyone. Just want to do a little bit of an introduction with me and then my intentions for tonight. And I know there's about 20 people that are supposed to be on this that have signed on, but if they don't come and they just want to listen to the recording, take the advantage. There's only 2 of us on right now. Anne, can you mute yourself? Thank you. So anyways, there's only a few of us. My main thing here tonight is if you have questions, this is the advanced side of things. And let's just, I only want to talk for about 30 minutes to 45 minutes, and then really target any questions that you have. And let's get into the thick of things when it comes to the advanced use of QuickBooks. And a lot of times it's about troubleshooting. It's about making sure that your work is accurate. So I've been doing this for, sadly to say, well, not necessarily sadly, it's good experience, but I've been doing this for about 42 years. And I was a freelance bookkeeper, started my own business in 2001 and had my company in Hamilton. And we grew it and sold it in about 11 years. And the main thing that we did is we have a lot of accountants that referred clients to us. Most of the time is cleaning up, rescuing, and fixing files. And we had clients in Europe and China and quite a few other places. So there has been some beautiful files that we've seen and great bookkeepers, and then we've seen some pretty good nightmares. So a lot of times when we've had to catch up and clean up, we've had to dance around how we were going to do this. And so it really gave that experience to the basics. Really, we just come down to the basics half the time. So my intentions tonight are just 30 to 45 minutes to show you some of the background things to make things that are accurate. And then I really want to open it up for questions. Just throw it at me and let's see if I can answer them for you, because it'll customize any of your challenges. It'll customize you to that. So I want to show you some tips and tricks as well, because bookkeeping should be simple, should be easy, and it shouldn't be convoluted or hard to look at when you look at reports. So one question here, Christina's going to monitor the chat line for me when I start to share my screen. Robert Clayson, you already said you were on last week's session. Is there anybody else that was on last week's session? If you could tell me that. And I'll just kind of wait for people to type. Okay, so Ellen, you were there too. So I want to make sure that I don't cover the same things. And the other thing is if you could just quickly tell me your intentions, what do you want to get out of tonight? And that way I can tailor my my session towards you. So that's really important. Great, thanks, Erin. And if anybody wants to kind of guide me in, right. Okay, journal entries. Okay, we'll talk about journal entries, the pros and cons of journal entries. CCA, are we talking amortization? Are we talking technically CRA? And just takes a couple of moments for people to, okay, great, thank you. Year-end adjustments, great. Okay, so Erin, just to mention to you, year-end adjusting entries is a bookkeeping function, and that's a start point. When we try and do a year-end, we can't do anything in closing up for year-end unless we know our previous year-end adjusted entries are in and they reconcile to our QuickBooks trial balance, reconciles and matches to the accountant final and trial balance entries. That's the most important thing. And that's our start point to close off a year end. So we always have to look back at, did they get posted in? That's our job. That's a journal entry. That's one of the reasons why we would use a journal entry. And then we would look at a trial balance once they're in, and do they match the accountant trial balance? So whenever I do a year end, the accountant sends the financial statements and they send the adjusting entries, but they don't always send the final trial balance. And I say, because sometimes I don't understand what you're trying to tell me, because verbiage is verbiage. They might say federal income tax or income tax expense, where I might have on the file provision for income tax. So I always have to try and figure out, what are they trying to tell me sometimes? And so their trial balance matching with mine kind of helps a lot. So that's most important. Oh, and here's another question too. Multiple sets of books, but one HST number. That's a good question, Dawn. When we get into the open forum for questions, can you just bring up some more details on that for me, and I can guide you in that direction. So one of the things is I'm going to close this down and share my screen now. So Christine, I'm going to ask you to just kind of keep an eye on the questions, and I'm going to share my screen. And I'm going to get rid of that toolbar that was bothering me a lot last week. There we go. And I'm going to pull up QuickBooks. So it's interesting. One of the most important things as bookkeepers that we have to keep in mind is we are responsible for accuracy. That's our job. We live and breathe by bank statements, credit card statements, lines of credits, mortgage schedules. You know, we look. It's all about the balance sheet, and it doesn't matter if you're a sole pro, partnership, or corporation. In a way, you have to look at all the activity statements in order to get things right. There's a rule there that as a sole proprietor or a partnership, you don't necessarily need to reconcile the balance sheet, but in order to make sure that everything's been captured, you kind of do. With a corporation, it's kind of law that you have to reconcile the balance sheet. So that's fine. We reconcile banks, we reconcile credit cards, but we're all humans. And I've been doing this for 42 years, and I still can make keyboarding mistakes. And so it's about me going into my custom reports that I memorize, and I look at all my work. So we're going to take a look at that shortly. One of the things I really think it's important that you understand is QuickBooks, there's 5 ways to get to anything that you want. If you want to write a check, if you want to do a deposit, if you want to look at a chart of accounts, there's all kinds of ways to do this. But so you can look at it the way you wish to look at it. But in essence, sometimes when you look at your general ledger, we have to kind of say, hey, something's wrong there. And there's things that go on behind the scenes. And so one of the things that I want to talk about tonight is how you set up stuff. And so let's just go to the list. The lists here, have all kinds of things that set up behind the scenes. So if I went to an item list, so we all know about our chart of accounts. And last week I talked that you make your chart of accounts simple. Deal and list and create whatever's going on in the company. If there's a line of credit, if there's a mortgage, if there's multiple bank accounts, if there's multiple credit cards. You know, one of the biggest tips and tricks I could say to you is the last digits of a bank account, put them in with the bank. And a lot of times I see bank checking. As a freelancer, please tell me if it's RBC, if it's CIBC, Scotia, TD Canada Trust. I'd rather rename it. And you can just come down here and edit the account and rename it anything you want and put the last 4 digits. And I would do that if there was multiple credit cards as well. Last week I talked about I'm not a fan of numbers because I'd rather have it simple. And then sometimes you have to maintain the numbers far too often. So you don't have to have numbers. The accountant's going to have their own numbers. And so that's okay. They accept that. So this way you can just go by alphabetical order, by type, bank, receivables, current assets, fixed assets, and so forth. So I don't sub-account very much because when I'm looking at analysis at a higher level, sub-accounts kind of make a mess of things when I'm looking at multiple years or multiple types of reports. So when I keep it simple, then that works better for me. If you have an accountant that enforces numbers, then you put numbers on. It's that simple. But I do find at the end of year end, take a look at your chart of accounts, and if there's nothing that's being used and it's 0 all the time, well, we could just right click and make it inactive. If there's anything in that account, you cannot delete it. It will not let you. So there's nothing in that account. So it would let me delete it. So down here is a way where you can delete, edit, or create a new account. And if you're not using it, you can make it inactive. Any account here on your chart of accounts, you can just turn around, hit quick report, and it's going to come up with the details for you. So that's cool. That's lovely. You can play around with your chart of accounts, and you can just inactivate or delete and customize to the company that you're working for. When it comes to the list, we have an item list, and items are tagged to, just going to get rid of this one here. So items are tagged. You want to think about when you create invoices and you say consulting services, or you say this product or that product, it needs to be tagged properly to the income account that goes to the income, profit, and loss statement. So this is very important because sometimes what I see is if there's a reimbursable expense that you are putting on an invoice, it should go to a revenue account. It should not go to a cost of good or overhead expense. So it's really important to see where your items are going to make sure that they're going to the right spot when you make this up. So the reason I say that, so just keep in mind, I've seen the nightmares. I've had to fix the nightmares. I've seen things go wrong. And so when you look at, if you have cost of goods sold set up, or you have overhead expenses, I don't expect to see credits when I look at the GL, because if it's a revenue source, it should be up in revenue. And Revenue Canada states that you have to report worldwide sales, including reimbursable expenses. That's still part and parcel of revenue. So sending them down to cost of goods sold or overhead to wash out that purchase is not necessarily the right way to go. So when I look at these items, there's not a lot of items on this file. This is a makeshift file, and I have little items, but I have to double check and make sure they're going to the right account. So that's very important. So when I look at my item listing here, it is very important that everything is being tagged to the right chart of accounts, right? The right account listing. When I come over to, most of the time I don't use fixed asset item list or price or billing. Sales tax code list, well, that is fine. We all know it's going to go to the HST payable. If you are playing around with another province and you owe GST, if it's another province, then we will have multiple different codes here. So behind the scenes, is it tagged properly? And that's important there. And then we will have the payroll item list. Oops, where'd you go? I think it's coming. Got a little bit of a lag here, guys. It's pretty windy out here. Very windy, as a matter of fact, up here on the peninsula. So I do have a bit of an internet lag, but I'll talk while I wait for that. So payroll items, it's really important that your payroll's costs are being tagged to the right expense accounts. And so you just want, if you have multiple payroll expense accounts, and if you have CPP and EI, and you have WSIB and those things, a lot of times I'll come into the payroll item list and make sure that they are being tagged properly. There we go. So here, I will also maintain this, and I will get rid of the stuff that's not being used. And it's simply a right click and make the payroll item inactive. I'm a fan of not having, so a lot of times QuickBooks template will have payroll expenses, CPP, EI, gross wages, and vacation pay on the income statement all get thrown into the one account. Well, I know for a fact accountants don't like that. They want to see CPP separate, they want to see EI separate, and they want to see payroll wages separate. And business owners may want to say, hey, wait a second, half my staff could be a cost of goods sold, and my admin staff is payroll overhead expense. And so this is where we come in here and create and add new items and adjust items here. So it's really important that you are managing the file the way the business owner wants it, and the way the you got to cover yourself for CRA, and way the accountant wants to see it as well. So here's where I will create invoices. And are there advances? Are there different types of salaries, different type of hourly, different type of wages? And here, when it comes to gross salary, we will tag to the T4. So we're making sure it's tagged to the T4. So in about, this is week 2. So in about 4 weeks, I'm going to talk about payroll. And this is, again, where we will say CPP company. We're going to click on this, and CPP company, and the employee, is it the liability itself? Is it going to the liability account? So the CPP employee and company portion. And then we're going to say, okay, where's the company portion going? And we're making sure it's tagged to the right account. So that's key to making sure that everything's going to the right spot. So the payroll item listing is also key to making sure that things are going in the right spot. So we got payroll. Class list. So I want to talk about class list. It's not the file. I don't really have a class file, but I'll try and touch on it. And that is, if you have multiple locations, or you have multiples of divisions, we can actually class where you can have on an income statement different sections. So you could track a profit and loss by location. So I made a couple up. So say this company had 4 locations in Kincardine, Owen Sound, Port Elgin, and Tobermory. So every time you go to write check, every time you enter bills, every time you create an invoice, you're gonna tag a class. And that way you're building at the data entry level, you're building those profit and losses in advance. Really cool to have a profit and loss by Kincardine, by Owen Sound to Port Elgin, and Tobermory, but it's very key that you hit a class every time you make an entry. So I do have quite a few files like that, and it's not necessary, but if you do use the class function, it's key to make sure that you're accurate in your data entry. All right, so that is that item. And then I'm just going to come down here. I'm not, feel free to use the memorized transactions list. That's a transaction if you have something the same all the time. Insurance, a monthly, it's a monthly transactions, monthly activity that's same amount, same date over and over again. The only thing is with my details, that's okay, I can use it, but with my detailing, I usually add more than what the memorized transaction lists, and I'll talk about detailing in a minute. And I did touch on it last week as well. So that's that. The other thing that I want to mention is edit and preferences. So one of the things that I'm talking about right now is behind the scenes in QuickBooks. Is everything happening the way you intend it to happen? And so when we look at preferences, some people will call me and say, can you get the sound? Well, every time I hit OK, I get a sound. Well, all this back stuff here is setting you up to how you want your QuickBooks to look. And if you just play, the great thing about QuickBooks is you can't really screw up. You can fix 99.9% of the stuff. So come and play with your QuickBooks. So company preferences for accounting. This would say, do you want to use classes or not use classes? Do you want to use account numbers or not use account numbers? Do you want to automatically assign a general journal entry? I don't. I don't. The old rule is every journal entry had to have a number. What I do now, because there's different levels of bookkeeping and I'm the freelancer coming in at a set different level, my journal entry number is my initials. That tells me that I did that. And that reminds me that I did that. So I usually tell everybody to use their initials. It's not so cast in stone anymore to have number after number after number. But one of the most important things you could do for yourself is when you close off a month, close it off here. So you can set a closing date. So each month, and the reason that I recommend this is if your HST is monthly and you filed HST on a certain number, then if you close off this month, it stops you from accidentally posting back in a previous month, because that's going to take your HST off. So right here is perfect to close each month. If you are quarterly HST, then maybe do it quarterly and close it off. But I find once I file an HST, I don't want to change those numbers. So I want to close it off, and it gives me a reminder if I accidentally hit a previous month date, and I get to have a decision whether I want to make that change or not. But keyboarding is keyboarding. And when I'm doing data entry, I can be looking at the data entry, thinking about dinner. Do I need to feed the pets? And I have multiple things in my head. And so I can make a mistake. And I don't know how many times I put in the year 2000. So how many trial balances did I just screw up, right? So when I close this, it gives me the warning, do you know what you're doing? And then I go, oh yeah, that's the year 2000. I shouldn't be doing that at all. So this function is actually quite nice right here, set date password. And the password is my initials. That's all it needs to be. And if a bookkeeper quits, you can override this. Bookkeeper leaves for whatever reason, you can override this password very easy. So it's not that secure. It's just a warning. But here's where you set up whether you want to do certain things. Calendar I don't really use very often. Checking. One of the main things is general. So I like to, wait a second, where's the other one? Automatic, there's another one here that is quite cool where you can bring up past entries. I just had it open a few minutes ago. Where'd you go? There we go. So one thing I love, because I'm on multiple files, and I like automatically remember account or transaction information. So automatically recall the last transaction for the same name. And it comes up, and then all you have to do is change the memo and the amount, and you're good to go. But the great thing about this is the account will come up and it tells you which account it should be in. So if you are somebody that's 40 hours an employee and 40 hours on a file with the company, that's great. You probably already know where it goes. But if you're a freelancer, automatic recalling, because we have so many files, we're not going to remember where everything goes every time until we get it back on the file. But this is where you can actually play around with things and set up your QuickBooks, even to the color of the background, the whole bit. Items and inventory. I guess I'm going to have a question, and if you could just put it in your chat. Do you track inventory on QuickBooks? Or do you want to track inventory on QuickBooks? I'm going to give you a pretty good answer on that one, a quick answer on that one. So Christine, if somebody says they want to, just let me know.
Okay. I have someone who says they do not currently, but I'm trying to see if there's anybody else that has some insight here.
I'll give you my opinion anyways.
Good.
I like it. Do not. So this is a consensus of quite a few freelance bookkeepers on the planet. Do not integrate and turn on inventory. It's a mess. You need one person 40 hours a week to drive that function. I call it drive the bus. And it is a full-time job in itself. And if you don't fully understand it, find another cheap program that can do the inventory outside, and you journal entry the values on a monthly, quarterly, or annual basis in QuickBooks, but keep them separate. We've all come to the conclusion inventory is a tough one to integrate into QuickBooks file to keep it accurate. And then once you turn on inventory in QuickBooks, you cannot turn it off. So if the mess starts happening, we've got a mess, and there's a way around it, but it's a very expensive way around. So I'm fully still, after all these years, in the opinion, please do not turn on inventory, and really think about what you're doing if you really want it. And I've had a client, told them to really think about it. They still wanted it. And when I sold my practice, it was a mess, and nobody was doing what they needed to do or understanding it. And it would just ended up being a massive mess. So here's a place where if you have multi-currencies and you can turn on multi-currency, this is another one. It's going to be difficult to turn it off. So just thoroughly understand what you're doing there. But there's all kinds of things, even including spelling here. And so this is the behind the scenes stuff. So when it comes to advanced bookkeeping, I want to go to memorize reports. And this is key of how you want to manage the file, especially if you are the bookkeeper or you are the business owner coming in onto the file. So just because you reconciled the bank statements, just because you did what you thought you had to do with the banks and the credit cards and lines of credits, now these are set up to, did everything go where you expected it to go? So when I have cross-checking reports, and then I have financials. And here I can turn around, if a file's way behind in a year or 2 or 3 or 4, then I may set up multiples. And it's very easy to do so. So when you come to memorize reports, you're going to come into these sections. So this section here is a profit and loss standard. That is my profit and loss right here. But my profit and loss standard is, I got to take this back to 2015. 4 to 31 300915. So this file is fairly old. It's a doctored file, and I can do lots of things when I come into this. I can go to custom reports, and this here is your savior for anything that you want to do. So I can come in here and I can go percentage of income, and I can just hit that. And now I have percentage of income. And so if you're bookkeepers, a business owner knows their percentage of income. They know that their merchandise is supposed to be 32%. Well, when it's 40, it's our job to say, why is it 8% higher? So memorized reports are all about analysis. Is it working? So as bookkeepers, we do the data entry, then we say, does it make sense? So all these memorized reports is, you're intimate with the file, the business owner is intimate with the file, you're intimate with the data entry. So when the business owner says it should be 32%, you can drill down and find out why it's 40%. We live and breathe by dates on bank statements and activity. So we're black and white. The business owner might not be black and white. So it's our job to turn around and say, okay, but we had 8% more costs, or something went wrong, or what happens. And so we provide those answers. But I can also come in here, instead of total only, I can go by month. And I'm just going to get rid of the percentage to make it a little cleaner looking. So here we go. Now I've made it by month. And I could also make it by quarter. And I can also make it by year and take it down to, let's see how far this goes. So now I can go by year. And so this is cool for a business owner because they can see if they're progressing or they're digressing. And so when's there, I would look at this if I was a business owner, or if I was analyzing for the business owner, because if they were thinking of selling, I'd go, oh, wait a second, you were up, up, down, down again, back up. So that's key to looking at 3 good years in order to sell. So this is the analysis side of things. And I can do all kinds of stuff here. And then what I would do is I would memorize it. So if I come over to memorize and I say, okay, profit and loss by year, then I can memorize it in a saved group. So this is just great stuff to play with. Sometimes when I want to look at, sometimes I want to look at just the cost of goods. And I'm going to take this back by total only. And I'm going to bring it up back to 2014. So when you memorize stuff, you want to look at stuff. Maybe it's just cost of goods. See how I can click on this, and I can click on this, and I can click on this. And say I just want to see overhead expenses, all of them. I can click on the total. And there's this little mess that comes up and it's kind of hard to read. So when I come over to custom reports, I can customize the way I want to see it. I don't need a left margin and I don't care about type at this point. I just want to see how it's looking. Sometimes I might change from name to source name, and that's important if you have classes. If you have classes, name will come up of the class, not the source name of the vendor or the client. So sometimes I'll change that to source. And I love the memos. I think if you heard me last week, I'm a detailed person and you have to tell the story in the general ledger. But I won't like class because I know there's no class on this file. I will turn sales tax code on. I don't need clear. I don't care about split. I don't care what other account it was affecting, but I do care about debits and credits. So I take remote off, click on debit and credit. Now I can see what's a debit and what's a credit. And I don't like sales tax code here, so I have to press down on my mouse and I move it over there. And then so easy to open it all up, see the details. And then I can turn around and I can name this. So there's display header and I can say over detailed report, overhead. And I can memorize it and bingo, I can throw it into my cross-checking reports. And this is where I could easily go down and do I have posting errors? Have I missed HST? Love the putting the sales tax code on here because before I do my HST, before I do my HST and I file it, I can make sure that I did not make posting errors. And so that's really key for that as well. And you won't see HON here because this code that I have, cash receipt, whoever the initial was, and the date that's a journal entry. And so this is how I do cash receipts if I'm not paying back the business owner. So if you're paying back the business owner because they've paid out of their personal, you could payable that and write them a check or e-transfer or whatever. But if we're just going to go back and forth in shareholder, this code right here tells me that it's a cash receipt and there's where my HST is. It's done manually. And so the other thing here is I said last week for a couple people will get this as a reminder. I do a tag. Is it fuel? Is it postage? Is it gift card? Is it meals, office supplies? The reason is if I come in to one of these and I saw meals here, then I know I have a posting error because it should be fuel. So I do a lot of proactive bookkeeping because I like to be lazy. I think we should be lazy bookkeepers, get it done right the first time. And how we get it done right the first time is we have all these little tricks and tips to catch posting errors really, really quickly. So anyways, I would memorize this. And I already did, so I'll replace it. So if I did a little movement like that, and I wanted to keep it, I have to replace it. If I made the movement, it went, it'll just go back to the last memorized report that I did. So I like my details here. I do short details, by the way, guys. I don't do long ones. So if I opened this guy up, and if I started writing details and details and details and details, and I went to a second line and I told a story, the GL's not going to be able to pick it up. It's just going to be a bunch of dots like this because it's too long. So tell the story short and sweet. It's a book. It's just tell the story short and sweet. And you'll see that the details are actually very consistent. I don't use on the, I use space dash space just to keep it nice and linear and easy to go. So that's one of the things that I do. And I will do this with cost of goods sold as well. I can pick it up. I can custom design the report, and then I can save it. So that's a one that I really like. And another thing I want to talk about is credit cards. Many people I see come in here, grab a credit card, and they will say Visa. I don't think I have this set up. And they'll say Visa, and they'll say a certain date, and the entire Visa comes into pay bill. And then you write it from here. But you're bunching, and you're bunching all the meals and all the fuel and all the expenses, and it's not a great way for managing what's going on or for troubleshooting. So QuickBooks, Sage 50 doesn't have this, Xero doesn't have this, but QuickBooks does. And it has enter credit cards. And I love this function. So enter credit cards is you look at the statement, and you will see that it's Macy's, and you will see that it's Staples, and you'll see that it's Starbucks, and you literally enter each one individually. And some of you might say, well, that's a pretty long vendor listing. I'd rather have a long vendor listing where I can quickly troubleshoot rather than have to rework how I might have got all that bunching on a credit card wrong. And I can easily tag with my tax here, then I can be cleaner with my HST. And this reference number is statement, by the way, so statement that. This one here lets me use that reference number over and over and over again. So if I'm looking for a receipt, I can go to my general ledger, I can go to my reconciliation for my credit cards, and I can find out what statement that belongs to, go to the filing cabinet, grab the receipt, and then take something back for a refund most of the time. So I do that, and that's so much cleaner. And once you've done that, then you can reconcile the credit card exactly the same as you would do a bank. You would have your opening, your closing, and everything in between. I don't believe I have read it on this guy. Right, so, but you can actually come in here, and it's so much cleaner. So that's, I really can't stress that one so much. So memorize reports is really important. Memorize everything that you could possibly memorize. So I go down, I don't necessarily do the banks because I'm going to track that separately. I will have open invoices and aging AR, aging AP, unpaid bills. I might do inventory just to make sure that I haven't posted something silly into inventory. I'll do total fixed assets as one, and I will do debit credit, split, rename it. There's my renaming right here. My chance to rename it right here. Name it anything you want, guys. This is not cast in stone. What makes sense to you is how you will name it. This is for internal purposes only. And there's my display. What do I want to see on this? But most importantly, I want to see the debit and credit, because I visually like debit and credit. Go ahead, Tina. Or is somebody off of mute?
I think we're somebody's maybe gone on mute.
Okay.
I think everyone's muted now. You should be good.
Okay, perfect. So you can play around, guys, with all of this stuff, and it keeps the whole point of this. Do you have an accurate set of books? So the advanced side of things, move yourself away from data entry. Now use QuickBooks for analysis. Is everything where it is supposed to be? Because most of the time bookkeepers will sit down with the business owners and say, okay, what do we got, right? So that's important. So custom reports is very easy. We do it because we want to track our accuracy and do some analysis. And we can do all kinds of things. As a matter of fact, I could turn around right now and say, I just want to know how my assets. I just want to know my assets. That's it. I don't want to look at a balance sheet. I don't want to look at the debt. My business owner, he has a debt. He doesn't want to see the debt. He just wants to see his assets. So you can come over to custom report and you can go to filter. And you can filter all kinds of things. So if I wanted to filter by account, I could go to multiple accounts. And I just want to pick the banks and the receivables. Done. That's all I want. That's all the business owner wants. And I can hit OK. And that's all I get. So you can turn around and filter. This is not the right one here. Let me just think. I'm going to go to the general ledger. And I'm going to say, okay, what do I want? There's a payroll clearing here. I just want to make a report for payroll clearing. So I can go to custom, filter, account, multiple accounts. I think payroll clearing is actually inactive. Let me just pick something. So I'm going to say accrued liabilities. There we go. So you can actually, and then if I want to keep this, I hit memorize. Well, first thing I do is I will go rename it, call it accrued liabilities, and then I will memorize. And because it's not, I want to keep my general ledger, I will say new report instead of replace, because if I replace it, I lose my general ledger. So you can actually come in here and your friend is filter. So sometimes if I've come across payroll being done manually, so then I will go down and go by name, and then I might pick up a payroll person, say this person. I just want to know, there's a reason why I just want that person, and then there's nothing there at that point, but I can go down here and I can do whatever I want. I can look for amounts. I rarely use this when you're rarely you aging. I do accounts a lot, class a lot, name a lot. But you look at that, you can even, if you have a consistent memo, you can even track by memos. Rarely do the addresses and stuff like that. What else would I use it for? But look at your options, right? Oh, I can do sales tax. So if I want to do sales by rep, I can't do it with this file, but if I had 5 reps set up on my invoicing and I want to see what their total sales are, then I can go by rep. But I could also come up here and go to sales and go sales by rep summary. And I don't have that function being used on this, but you could have, if you had 5 reps, then that sales by rep summary is coming up. And all you have to do there is if you want to track rep sales, is you would be in invoicing, and we would have sales by rep right here, and every time you invoiced, you would turn around and put the rep's initials in there. So there's tons of things you can do here. There's tons of things you can manage here on desktop. And so that's kind of cool with that as well. So I'm going to really stop right now, and really, I would like to engage you guys in any challenges and things that you want to get done. It's 7:20. We got some time. So I'm gonna address the first couple of questions. So year-end Justine entries, I've already kind of addressed that. You are going to go to company. Come on. So company, make a journal entry. So this is when all else fails, you're going to have to do a debit and going to have to do a credit. And it's all about the date that it happened. And then you're going to have to know what's the debit, what's the credit. a lot of this sometimes is a balance sheet thing. So I don't like journal entry unless I have to. And there's a few reasons why you have to. Number one, if there's cash receipts and you're not going to pay back the business owner. So you have to journal entry in the cash receipts, the HST, and you offset shareholder. Year-end adjusting entries, they'll be here. Let me just see if there's a year-end adjusting entry sitting here. Oh, I have to go back to, yeah, there's going to be one, but it's 2015. So it's a long way. So even with this journal entry, rent, HST, and a due to, if there's a due to other corporation, still prefer not to do it this way, but if you have to do it, you have to do it. I don't journal entry bank fees or interest. I'll talk about that in just 1 second. But when you journal entry, you have to fully understand how debits and credits work, because you can get them backwards. And if you get them backwards, that could harm the business owner making informed decisions, because the bottom line or the net profit is wrong. So it's really important that you keep minimal, because I could have done this through invoicing rather than a journal entry. I could have created an invoice and I could have done it that way. My bank fees and my interest, right, just go through here. Just go through what's the bank. It's a debit. Oops. It's TD Canada Trust. The bank fee is $25 monthly fees or bank fees, wherever, however you wish. And I can copy paste and override that. And so the reason why I put it here and I put it here is because this part of the entry is going to the balance sheet and this part of the entry is going to the income statement. And when we get to the general ledger, you're going to see that there's a lot of detailing going on, and we don't want to be missing the details. So some of you, and I turned on class, so it's going to ask what's the class. So some of you will go here. Here's the service charge. Here's the date. Here's the interest. Here's the date. The problem with here is it's a pretty sloppy entry. So two things I've found is put the entry in, and I'm going to make one. I'm going to show you the difference. So that's going to 53.51, and it's January 2019. I'm going to put in $25, and I'm going to make it January. So this date here, and I'm going to go to bank fees. And I'll say Tobermory class. So the problem with this date, you really have to be careful of this date, because if it is wrong, it's going to take your bank register out. So if I, you must enter an ending balance. Oh, sorry, my fault. Okay, so what happens here is that $25 becomes a write check, except that's missing, and that's missing. So it's really just a journal entry. And so I'd rather just go through write checks and put in the information, and then I've got my future, my proactiveness is being taken care of. And I do that with the interest as well. So reason why we have to be careful with dates. I'm just going to go to a balance sheet. I have to see where this last reconciled. I think that was, yes, so 53.51. Okay, so if I go to September 9th, 2016, and I want to be cognizant of these numbers. So if I go to reports, banking, previous rec, and I go down to 5351. Okay, so I have to go to December 31st, 2018. So, okay, so 16. And I am September 30th, right there. So there's my reconciliation. I'm expecting to see my bank reconciliation register. So that key, it's a keyword, register to be exact same number as this on the balance sheet. So just a heads up, an accountant has said, they all say it, just because you reconcile the bank doesn't mean you're reconciled to the balance sheet. So when I look at September 2016 and I open up that balance sheet and I come down to the reconciliation and I come down to the register 294877. And just in case you don't know, if you go to view, open window, I can go back and forth from one report to another. So that's view, open window. So there's my balance sheet, and my balance sheet says 294877. I go to the reconciliation detail, and there's 294877. That is so important if you want to keep your accountant smiling. So when we look at this reconciliation detail, this beginning balance should be the exact opening balance on your bank statement. That's very important. All of this in between is mirroring what's on your statement, and you've clicked it off when you've reconciled. That's what those checks are for. And then there's your deposits. And then you have a cleared balance. And the cleared balance is your closing amount on the bank statement. And so it could be a positive, it could be negative. If somebody's in the line of credit, it's going to be negative. If it's positive, it's because people are have a better cash flow. So it is what it is. Then everything else here down below is uncashed, and you wrote it. And then you're coming to your register. So everything that was posted in, this guy must equal the balance sheet. Okay, so that's very important, especially for year end. When it is off and it doesn't, it is 100% a date issue. And the reason we say that, and trust me, I've been through this for many years when it didn't match. And it's usually something that's off on a date. And so your reconciliation may have a future date clicked off. And when you look at your balance sheet, it's only going by the date that you gave it. So when you reconcile and you've clicked off a future date outside of September the 9th, 2016, then, and it doesn't match, that's your issue right there, because the balance sheet's only going to come up, the numbers are only going to come up on the date that you gave it. So that's really key for making sure that your books are accurate, especially for year end. And I would look at that on a monthly basis. The reason is, when I had my company and I had some data entry staff, and they would go like 6 months and look at it, and then they have 6 months of troubleshooting, where did it go wrong. So it's just a quick look every time you reconcile to make sure that that's okay. So that's that one. There was a question on CCA, so amortization schedules. Whoever asked that, can you unmute yourself and ask, give me a little bit more details? Christine, can you check and see who asked that?
Yes, it'll be Ellen.
Ellen. Okay, Ellen, are you there to unmute yourself and give me a bit more detail of what you're looking for?
Yeah, so I've unmuted it. So so with respect to the amortization entries, would it normally be the bookkeeper that is calculating those, or is it going to be the accountant? And do you set up separate amortization accounts for each class of asset, or I see you only have one expense account there. Just curious how your structure is.
Okay, so I have always made it the accountant's issue because they have the schedules. However, they can come back with the amortization schedule for you to post in on a monthly basis. So sometimes I see that an accountant just says, here's the year-end amortization with the year-end adjusting entries. It comes with that. Then if it's a pretty big file, they'll say, here's your current year's monthly amortization. And then you as a bookkeeper could post it in. That would be through a journal entry, by the way. That would 100% be through a journal entry. And what I would do with those is I would just post them all in at the same time for the entire year, and then I don't have to worry about it. I would, if there was on this file, for example, there's furniture and fixtures and there's leaseholds. I'm not a fan of one. I'd rather have a cumulative amortization for leaseholds, and then I would rather have a cumulative amortization for furniture, for computers, for vehicles, anything, equipment, anything. I would have them all separate because it usually will come with the trial balance separate. And then when it comes to the amortization expense, then just have the one. And I'm just thinking it's called depreciation on here. So just to clarify, amortization and depreciation are the same thing. Does that?
Okay, yeah, you have both accounts on there. That's why I was curious. Okay, no, that's fair. I understand. I understand your process. So leave it up. So bookkeepers would always go to an accountant at year end then to get any adjusting entries. That's kind of how you split the workload then.
For sure. So year-end adjusting entries always come back from an accountant. So when it comes to year-end, you're giving them hopefully a clean, crisp set of books. They do their magic. I always call it magic. They do their magic. They come back with the year-end adjusting entries. You post them in. You match to the trial balance. So on this one, I know the accountant only has one, and so I have to live and breathe what he gives me. So that's something to be said. I have to live and breathe what he gives me. If he only has one accumulative amortization, then I have to live with that. However, I prefer having multiple separate. And then you don't need to have, if they give you multiple depreciation or amortization, you don't necessarily have to have that. But I live and breathe by their trial balance, to be honest with you, because it's easier for me to match. If I match to it, I know I got a good starting point for the next year.
Okay, that's great. Thank you.
Okay. Christina, is there any other questions? Please feel free, guys. You got, like if there's any challenges you're having, go for it.
I'm not seeing any in the chat quite yet, but also if you're comfortable just to unmute yourself and ask the question, if that's easier than typing it out, by all means, you're more than welcome to.
Yeah, and you can unmute too, guys. I'm just going to go through my list.
Sandra, I had a question about double entries.
Oh, right, that's the other one. Tell me about that.
So we had entered in receipt of revenue, and the month later he had entered it in again. We missed it. He reconciled for the year. The accountant did our taxes, and we found it this year as a mistake.
Okay.
So we missed it. The accountant missed it. How do we can't fix that when it's taken care of, but going forward, once the month has been reconciled, how do we correct that?
Okay. So that's a good challenge, right? Because you cannot correct it in the previous year because they've closed off the year, they filed to Revenue Canada. It is what it is, right? You paid the tax on that extra revenue if there was tax. You can't change that. So what you do here is in the current year, you come to customers, credit memos. So you can actually go to the invoice. I'm just going to check and see if I have, you can actually, the easiest way, by the way, is if you go to do I have an AR? Yeah, open invoices. And say, for example, that was it. This is not going to necessarily work as a good example because there's a lot on it, but I could actually go to store sales. And if it was just a certain number, so I can't really give you an example of this. See how there's all kinds of payments put on this one invoice, but you could actually go to that invoice, open it up, and if there's no payments on it at all, you can open customers, credit memo. And that's the simplest way because it's going to turn that invoice, it's going to keep the invoice where it is, and it's going to credit memo. I'm going to just do one for you, okay? I'm just going to create a store sales. So whatever that client is. And I'm going to make it 113. Okay, so there's the invoice right there. And I'm going to save that. And I'm going to take this to 2021. And it's now sitting.
Beautiful.
Okay, so actually that's not the one I wanted. Sorry, give me one sec. There we go. It's sitting right here. So you created that. That's on open invoices. It's on your aging AR. You can open this up and you can say that's the simplest way. You can do this manually, or you can just go customers, credit memo. And now what it's done is it's created a credit memo. It's kept the invoice because you can't change that. It's created a credit memo. And so now it's a negative. If I saved this, you're going to see the 1276.90 and a negative of it on the open invoices, but you can kind of kill two birds with one stone, and you can save new, and it's going to come up and say, do you want to retain the credit or apply it to an invoice? So I will apply it to an invoice, and this is in this year, and I will go find it down here, and then I just say done. And it's gone, and it's now cleared. See how it's paid? It's paid by the credit memo. It's
Right.
gone, and now it's gone off your open invoices.
Perfect.
And while I'm here, guys, there should be no credits on your open invoices. So unless it says credit memo. So it's really important that you look at your unpaid bills and you look at your open invoices, because it has to be real numbers. It has to be clean because it affects the bottom line. And if we affect the bottom line incorrectly, we won't have the true numbers for business owners to make informed decisions. And so this is why I do all kinds of memorized reports. So number one, it reminds me what I should be looking at. And half of the stuff is the balance sheet. And I had a client, I've had too many clients that have said, I don't care about the income statement. The balance sheet has to be reconciled and accurate. Then the income statement is accurate. If the balance sheet is accurate, then the income statement is automatically accurate. And we had clients that were in Germany, and they were a family-owned business since the 1800s, late 1800s, and they did $640 million in sales a year. And they were our client because they wanted to open up in Canada. So the law, if an outside country company wants to open up in Canada, the law is you have to have a Canadian director, and you have to have Canadian bookkeepers and accountants. And so, I learned a lot off of them because they were adamant, I don't care about the income statement. I really don't care. It is what it is. If you reconcile the balance sheet and the balance sheet's correct, then everything else is correct. So it is. So this is why I'm always looking at all this stuff. And unless I don't want to see a credit, I don't want to see a credit here unless it says credit, then it's true. But then I'll say, if the credit's 6 months old, I'm going to say, okay, are you going to pay the guy, or are we going to write this off? So I'm always looking at this stuff and making sure that things are not as old as they say. Are you going to pay this or not? And so you have to question. I really want to say, as a bookkeeper, question everything. If it doesn't seem right, if it's staying old, if your AR is not being collected, if it's not coming in, who's collecting it? Who's paying the bills? Is that a true bill or is it a double posting? So always correct that sort of stuff and look at it, just because you want to be intimate with everything that's going on in the business. You're the closest person to the business owner, and you're the one that's working with the business owner to make sure that the numbers are great. And when it goes to the accountant, that the numbers are really good for the accountant, because if they have to fix things, that costs the company that much more. So that's something you want to think about. There was one other person that I said, when it comes time, give me more detail. Who was that?
Yeah, that was me. It's Dawn.
Hi, yes, right, yep.
So what I have is one of my sets of books is a Rotary Club. So we have several different types of accounts. We have a lottery account, we have a sign account, we have a general account, we have, I don't know, another account. So I've kept a separate set of books for each of those accounts, but it all falls under one HST number. So I think you've sort of explained it, that I should really be amalgamating that in one set of books under classes.
Is it one corporation?
Yes.
Yep, keep it all in one file. It is one corporation needs to have everything that's happening with it under the same QuickBooks file. And you can have, like, for example, you can have you can have 10 bank accounts and 10 credit cards, and each one means something different, right? But if it's one corporation, everything should be under that one file.
So how do I start a new set of books then to do that, or I merge these? I guess I can't merge these other
No,
businesses.
QuickBooks won't let you merge. How far into it away from year end are you?
Our year end is June 30th.
Okay, and has your what comments has your accountant made to you?
We don't have an accountant.
Okay, there we go. So is this the first year?
Oh, no, it's been running for about 45 years.
Oh, okay. And who does the year end?
I do.
The corporate filings?
We don't do a corporate filing. We do HST, but no corporate tax return.
Because you're not for profit?
Right.
Okay. You know what? If that's the case, June 30th, you could, I call journal entries bad words sometimes, because I just, there's so much functions on QuickBooks that you don't need a journal entry like we used to years and years and years ago. But I'd almost say pick a point in time and journal entry the other ones in.
Okay.
And then start reconciling going forward. And you might have some reconciliation issues just to get it right, and then you go forward. And if you do that, go to new on your account listing, bank, and you just go clearing account. and you just, to reconcile, you will, to reconcile the first time around, once you do that, you could pick June 30th, it's only September, and you could kind of merge them, bring them in, and then when you start reconciling the bank statements, if it's just slightly off, sends that slightly off amount in here, and hopefully it washes itself out debit credit wise by the time you're nice and clean and in one file. That's a good troubleshooting question.
Okay.
Yeah.
Because I had also asked about the general journal entries, but I think you sort of, I've got, I do a farm books, which is our farm. I'm self-employed, so I do my own books. I do the Rotary Club books. So, I'm the accountant in all of those scenarios.
Yep.
So I know, I sort of know all of the ins and outs of the books, but my books are a mess. So, I can look at them and say, well, I did this and I make notes and I do this and I subtract this and, but I mean, for me to do a balance sheet probably on any of those, it's going to be way off. way
Right.
off.
Right. So how you do that, how you kind of clean that up is use that clearing account. And you'll find out how off you were in the end. And that's, I mean,
Okay.
it's, and nothing's, you know what, a lot of times I say it is what it is, guys. Just, you clean it up and then you go forward with a better process that makes you sleep at night. Because there's so many people that have been hired on as receptionists or administrators, and company downsizes, they get rid of the bookkeeper, and then they make the receptionist or the administrator the bookkeeper, and there's no formal training, and the poor person just doesn't sleep at night because HST is the worst audit. Payroll is easy. WSIB is easy. EHT is easy. It's HST that keeps you up at night because did you overclaim any ITCs, HST paid on purchases? Did you underclaim underclaim your client invoices? And they go after for you that, and they're in your face for, I've seen auditors in your face for not 3 days, but 3 weeks. And it's nerve wracking what the outcome might be. And sometimes it's better just to just keep on learning. And it's scary. Like we just think bookkeeping isn't rocket science, and quite frankly, it is not. But sometimes some files and some businesses are rocket science, and you really have to think. A lot of times I have to say, stop and let me, that's why I said, give me the details, because I want to advise you properly. But it's just really interesting. Sometimes you just need to say, yeah, it is rocket science once in a while. And it's all about Revenue Canada. It's two things. It's all about Revenue Canada, and it's about accuracy to the books for the business owner to make an informed decision where they're not going to regret it down the road because they thought they had money and they didn't have money. So that's important. Yeah.
The Rotary Club did go through an HST audit for 2 years. I was delayed in getting it in there. And I learned a lot, but I mean, in the end, they were accepting of what I submitted, and it did work out, but it was a lot of going back and forth between these 3 accounts. And then of course the accounts are out because I don't charge one part of the Rotary Club back their HST, and so my HST accounts are not balanced at all.
Yeah.
Because I've got separate accounts, but one HST report. So
right.
yeah.
Right. So yeah, it's you're not alone. You're not alone on that because and it's interesting. I had somebody who every year end thought they had to start a new QuickBooks file. And I got, no, QuickBooks will let you carry on for years and years and years and years. And QuickBooks is, if anybody's second guessing whether you should have picked QuickBooks or Xero or Sage 50, don't second guess. You got the best one. I've been doing this since 2001, and I started off with Simply Accounting, which became Sage 50. And it just belongs, in my opinion, just my opinion, but it belongs at the bottom of the Indian Ocean. And the only reason why I say the Indian Ocean is because it's the deepest ocean. So when I need to troubleshoot, QuickBooks Desktop does it for me the best. Then if I have to troubleshoot with QBO, QuickBooks Online, it's not as good as Desktop yet. but desktop's been around longer and it's got that much more functions that I can kind of play, fix, tweak. And journal entries are really for troubleshooting and tweaking, but not for regular data entry. Bank fees, send them through write checks, and interest, send them through write checks. You got write checks, you got make a deposit for anything that's being deposited into a bank account that doesn't have an invoice, so not your receivable. So if you have receivables, then you're going to go to receive payments and you're going to relieve that AR. You're not going to go to here and say accounts receivable. That's the other thing I see sometimes is accounts receivable here. Oops, here. And so then if I could spell, that would be great. So I see sometimes people relieving the receivable here, and then it might be okay because there's the debit and the credit on the receivable on the open invoices, but you want to maintain that open invoices and unpaid bills. So it's about pay bills and it's about receive payments and pay bills. So the real process is if you run a payable, enter the bills, pay the bills. If you run a receivable, create the invoice, receive the payment through here. And if it's going to be a bad debt or not be paid, or it's a mistake, then you would go to credit memo. And so the main thing that I would say to you guys is play. Know it. Like there was a lot of things I didn't know in the beginning, and then I finally just took some time and said, what does this do? What does this do? What does it? I don't even use favorites. That's because I'm a freelancer, and if I use favorites or memorize transactions, it gets me into trouble sometimes. So I'd rather just go manually all the time and enter as I want to enter. Does anybody have multiple people on a file? Because if you do, you can actually set up separate users. And if it's just data entry people, like a staff person, and you don't want them to see financial reports, you can set up a user right here, and they only have access to a portion of the file. So that's kind of cool there. And you can set up passwords for you and for other users as well. So sometimes if you do have a data entry person and you really don't want them to see the financials, you can lock them out of the financials. So there's a lot of things you can do here, and see how I can pick up a chart of accounts here, and I can pick up a chart of accounts here. And if I go to reports, I can pick up the account listing here. Notice how it's called account listing, and then chart of accounts, doesn't matter, it's the same thing. I'm just trying to think. Sales tax, I'm a little sketchy about this. I don't always trust it. So I've created from the balance sheet, GST, my own GST accounts. And everything, this person here was in arrears, so I have an arrears account, and I will do that debit, credit, design it. So I've gone from the balance sheet, I've grabbed that account, and then I've done my own debit, credit, going through here, naming it, and setting it up so it looks good. Once you memorize it, that's the only time you have to create it, it's done. So you can always come in to memorize reports and very quickly go through this stuff. And the GL, for example, I'm always looking at my GL. I need to know what's accurate. I'm human, I make mistakes, and I want to make sure that everything in here is the way it is, and see how the detailing is here. The detailing is you know, I know I'm OCD on this stuff, so that would drive me nuts not having the word hydro. Quite frankly, it would have me nuts. Quite frankly, 2017. That would be my memo, and that would be my memo. Oops. And I wouldn't do, like, I would make sure it would be perfect all the way. And so I don't have spelling errors, and I don't have short forms, and I always have, that's the memo that I would do. This is a file that came to me and it's no longer. And so I get to use it with, trust me, all the names have been changed and everything. But I have the sales tax code here. So some people don't really understand the sales tax code. So they'll do 2 lines. They'll do this as net and skip the sales tax code and then just go GST and put the GST in here. But you're not doing yourself a favor, because this code, if I have to use if I have to use multiple province codes, then this sales tax code tells me that I picked the right code. And so I like this sales tax. And did I miss a sales tax code? Right there, like I can see one right there that has been missed. And so putting it on before I do my remittance shows me if I've made any little errors and such as that, right? So that's definitely key for me. Is there any other things? I mean, I could go on and on and on for this sort of stuff, but feel free, guys. It's really important that you have your bookkeeping accurate, and all this stuff really works. Really helps.
Sandy, I have another question here. From Anne, what cross-checking reports do you have set up?
Okay, here we go. So I do all kinds of stuff. So my cross-checking is going to start off right off the bat. I'm going to do open invoices and AR. I want to see my aging AR. Does it have a flow? So every month when I finish a file, I come in and I look at them, and I'm following the, is when it comes to AR and accounts receivable, is everything being received the way it should be and nothing's getting left behind? If it's accounts payable, is there things getting paid and nothing's getting aged and getting behind? Because if AR is getting left behind, should there be some collection calls? If unpaid bills are getting behind, should there be, are you going to expect calls from those suppliers? And if, you can question those, and then that's when you can find out if there's a double entry. And how you find out that there's double entries is you can go to reconcile, and if you come into any one of your banks, I don't think there's anything sitting on these guys, but if you see debits and credits, well, okay, there's stuff here. See if I was reconciling January 2019 and I see these 2 guys still outstanding. Well, are they double entries? If 7227 bank is reconciled and clear, wouldn't these be double entries? So I'm always looking to see if everything's flowing well. So old entries should never be left behind, especially if it's a credit card entry. They're real life. They're active. You make a purchase on a credit card. It's on the statement immediately. It should be clicked off within that statement. It should never be aging. And the same with debits. Checks can be aging because they could be lost in the mail. The supplier didn't cash it right away, so they might go from 1 month to another, and the supplier lost it or got lost in the mail. So checks can be aging because there's more factors, but deposits, debits, and credit cards shouldn't really age. So that's a fast way of knowing if you've got some double entries. But I look at this because I want to make sure that, do we need to collect money? Who's negligent? Which client is negligent? So I will look at open invoices gives me the details. So aging summary just gives me the aging. Is it current, 30 days, 60 days, 90 days? But open invoices, there might be multiple clients here, and who's and multiple invoices under that client. So who's aging? So I'm always doing those 4. Then I will get into, when I go down the balance sheet, like if I open up the balance sheet, I might do inventory. I'll create an inventory. I'll do fixed assets. I just talked about AR aging. I just grabbed it a different way. I might do accrued liabilities. And the reason I might do accrued liabilities, nothing really belongs in there for the year. So I'll open it up, take 1 second to look at it. Is there anything in there? Because I don't expect it to be. And oh, it's good. It's great. Fine. Computer assets, I always do when there's a computer expense on an income statement, and computer assets, I'll always create that one because it's very common to put a computer expense in the asset by accident. Because when you type computer, asset will come up before the expense. And so next thing you know, you've got $2, $10, $50 in on the asset. So I will create a report for that and clean up any of those postings. But I'll do GST, I'll do any arrears because I want to follow any arrears, any loans I will create because BDC, I want to track that the interest and the principal's on this loan BDC, but the interest is over on the income statement. So I want to track any loans that are on the balance sheet. If there's a clearing account, I know this one's was a convoluted file. So I've had to create a couple clearing accounts, but that's a troubleshooting issue. And shareholder, for sure I do that because the business owner gets taxed on whatever amount is in that account at the end of the day, the end of the year. And so if it's if the business owners put put a lot of money into the company, they're not going to pay tax on it. But because their balance is the company owes them money. But if they've been taking a lot of money out and the balance sheet shows that they owe money back to the company, they'll be taxed on that. So we always have issues with the business owner. Number one, they say, no, that was a business expense, but it looks like it was personal. Then they will say, no, that was a business expense, or that was this, or that was that. So I find it very important that they monitor the shareholder account and they confirm it monthly, quarterly, nothing less than quarterly, so they can confirm that their account that they're going to be taxed on in the end, they're aware of everything. And I had one client whose wife was dipping into his wallet with grocery shopping for business and using the business credit cards and the debit card and the whole bit. And so when he saw his shareholder, he goes, I didn't go there. I don't go to Lululemon. And so, it was, if I didn't present that, he wouldn't have not known that family was dipping into his wallet. So there's things sometimes you have to think outside of the box of what might go on. And the business owner has a right to know all the details, whether they like it or not, whether they like to look at the books or not, they should be. And they have a right to know what's going on. And so I like to be transparent. I think as a bookkeeper, we need to be transparent with everything. And if there's a second corporation and there's money going back and forth from a corporation, then I always detail and cross-check the due to froms. And that's very common as well. Common stock, I don't. It's $100, $10, $1, don't bother. And I do memorize. So my cross checks are all broken down to more or less what's on the balance sheet, but then I might go to my income statement and detail revenue. So I would go to the income statement and I would click on here and design a report called detailed revenue. And then COGS, I would do that as well. So I love it when my clients want to see all the details because it really keeps us on our game, both sides, the client and me, because the client can say, oh, that's not that, that's not software, that's this, that's that. And it keeps the books really, really current and makes it for an easy year end. When a client doesn't look at the numbers, like maybe once a year, then you've got all these questions at the end of the year, and year ends very late going over to the accountant. And things that we have to keep in mind is when there's a profit, this one doesn't, but if there was, well, this has a bit of a profit, but if there's a profit and there's been no corporate taxes paid throughout the year, the penalty and interest clock starts ticking 45 days after year end. So if there's no federal tax installments based on the previous year's profit, they should have made them in this year in advance of the year end. 75% of the corporate taxes should be sitting in CRA's account. Then the penalty and interest clock starts ticking. And so it is kind of critical that you're turning year end around half decent, even though they give you 6 months to file. Penalties and interest, it is what it is. You don't want to pay penalties and interest if you can help it. But if there's a loss, then you have time. You definitely have time. And it also depends on the year end when it is. If it's a December year end and you take to March or April to come in to take it to the accountant, then the accountant's also full of personal taxes and they'll just put that one aside. If you can get it done by the February mark, late February, they could possibly get it done prior to all the personal tax mayhem that comes in. Any other questions? Just trying to think.
Can you show, like when you were going through the company and setting up the user, like if you had someone just doing data entry,
Sure.
is it a pretty easy setup or is there?
It is. Give me 1 second. Don't do that to me.
And then is there a way you can kind of track what that person did? Or
Yes.
is it, okay.
Yes, and if this doesn't work, I'll change files. Well, this let me in today. Am I got my caps on? All right, I'm going to change files here. Give me 1 second. I'm going to just stop the share for a second. Okay, and I'm just going to see if I can quickly change files and show you. Ah. It's actually very easy and you get choices. You can give them just AR, AP. Okay, 1 second, it's just got to open up. Okay, well, I'll share my screen again. Okay, so you could just go to company, set up users. Okay, so if I wanted to add a user, I could just go here, follow the prompts, and maybe it's Trisha. And you can set up a password. So now you can say all areas to QuickBooks or select areas. So if you want to just give them a portion of QuickBooks. So sales and accounts receivable, a lot of times staff will say, a business owner will say, give them full access to sales and accounts receivable because I want them to create invoices and receive payments. If it's selective, then you could say create transactions only, create and print transactions, or create transactions and create reports. So sometimes that might just be full access because you want them to send out statements and collections and all that. So that would be that one. Then purchase and accounts payable. So a lot of times too, a business owner says to a staff person, I want you to manage the data entry for sales and receivables and accounts payable. So you can give them full access, or you can give them selected where they can make transactions, create and print transactions, or create transactions and create reports. So I will just go full access because sometimes that's why we hire staff to help us in the bookkeeping, is for those two things. Then if they're going to enter credit cards and reconcile, they can have full access, or you might just say, just create the transactions and post in the credit cards. I'll do the rest. I'll reconcile and do the rest. So you could do that. Payroll and employees, if you hire a staff member to look after the employees and look after the payroll, give them full access. If they you don't want them at all touching payroll because that's you, and that's a tricky one right there because once an employee knows all the pay rates of everybody, that's got to be very confidential. So you might say no access. And the next one is a sales tax. What level of access to sales tax do you want to give the user? No, full, or selective. Create and edit sales tax codes. I wouldn't really do that. I would say probably no access. I don't want them creating codes and getting that wrong, and then I've got an audit issue down the road. So sensitive accounting activities, what level of access, sensitive accounting activities do you want to give them? And so this could be full access or selective. So create, print, or create and create reports. So this would be like banking and journal entries and all that. Journal entries are tricky, guys. You have to know your debits and credits. So I probably would say no to this one, just to make sure that they're not doing journal entries when I don't want them to. And then the last one is sensitive financial reporting. You can kick them right out. So they could go to your memorized reports and click on one of those, and it's going to say you have no access. So anything that you give them no access to, they can go into all of it, but as soon as they click on something that has no access, they have no access to, a warning comes up and they can't get any further than that. And so I like this one because I don't want an employee when I had them to know if I've got a profit, because then just give it time and then I'll be asking for a raise, right? And most employees see sales, but they don't see all the rest of the costs and stuff like that. So this is a good one here, is they can't see the balance sheet in the profit and loss statement. And then, do you want this user to have the ability to change or delete transactions? If it's receivables and payables, and that's what you gave them access to, you can say yes if they're managing that, or say no, so they have to get permission from you to do that. And should this user also have the ability to change and delete transactions that were recorded before the closing date? That's usually a no, because when we close the books, we're protecting the data entry that we last saw and reconciled and made an HST remittance out of. And so we don't want that data entry changed. You know, and if your HST is annual, and you can backdate all you want, as long as the business owner hasn't made an informed decision that affects the reports that he or she originally saw. And then you can finish, and here's what you gave them. Here's what you gave them and they don't have access to, and you finish. And now there's Trisha, and she's all set up. And so what happens here is, if you have multiple people on the same file, there's something called an audit trail right there. And when you have multiple people and you're trying to figure out who did what, just pick your dates. And what's going to happen is something will come up. If you pick your dates, say it was today, something went wrong, the bank's no longer reconciled, something's happening. What happened? You can come in here, pick your date, range where you thought it was, and it'll say last modified. Let me take this back to 2015. Oh, there we go. And in here, this is just one day's worth, but in here, it will say prior, deleted. It'll give you all the changes of that transaction. So if somebody, some employee says, I didn't do that, well, apparently QuickBooks said you did do that. And so it's kind of cool that you can do that. With QBO, everybody has their own username and password. And you can very easily find out who did something on a file, because every entry is under that person's username and password. So there.
So then when you open up QuickBooks, it would ask them for that password, or how do you switch the user?
When QuickBooks is opened originally, you're going to put in your username and your password. So as I opened this, you saw admin. So it could be Sandy, it could be Ellen, it could be Sam, and then the password. So when I come here to set up users, so for example, Jack is going to have username is going to be Jack and and his password, Sally and his password, Sam and his password. I'm admin. So the business owner or the lead bookkeeper is always admin, because you have all the access to everything. And then there would be Tanya and Trisha. So the username would be one of these names and their own password.
So when they open up QuickBooks, it's going to prompt them to pick a username and then log in.
Correct.
Okay.
Correct. And it's lovely in a way if you have multiple people on a file.
Yeah, no, we were looking at doing some of that and I wasn't sure how I would, run that. So that's great.
So one of the things I would say is, when you're using QuickBooks, if you have to think, how do I say this? If you're trying to fix something, if you are trying to figure something out, it really simplifies things for you. So if you're trying to troubleshoot something or you're trying to fix something and it's taking the long way around, there's always a simpler way. There's always a simpler way. And I think the best way you could, I've had to do a lot of troubleshooting, a lot of cleaning up and all that. And sometimes I would sit here and go, how am I going to do this? Because this drives me crazy. And so a lot of times I might have, it's a great example, I might have everything in the wrong spot in insurance. and I maybe want to have 2 insurances, and maybe there's 20 entries here, and there's only 2 entries or 3 entries I want to change to another insurance. So, sometimes you can just rename it and then move 3 instead of all of them. And there's ways you can kind of work around things. You have to be careful with multi-currency. Do you leave it at 1, or do you have multiple rates on a daily basis, monthly basis? That's a session in itself. Inventory is a session in itself, and payroll is a session in itself. The one thing with HST, if you want, is I went to the balance sheet and I went over here to custom reports and I made my header up and I did my own little regular general ledger HST. And I follow this because I don't trust, I trust QBO a little bit more now than I did this one, the sales tax report here. I still think you have to have, if you use the sales tax report, that's fine, but you always have to come back and double check that this payment amount here using this is the same as your balance sheet, your general ledger. I think that's very important. And so I have that as a cross check because same as the sales tax on my general ledger, I want to make sure that I'm not overclaiming here. So I do have a lot of proactiveness in my entries to make my life simple when I have to prepare a remittance. And it's the same with payroll in a way. Payroll liability balances right here. This is a prime example. If I was at year end, why do I have money still owing? How come it didn't get picked up? This got picked up, this got picked up, and these did. Why do I have a balance owing? So my T4 summary is most likely going to be out by the time I get to December. This is a fake file, so I know, but it's a prime example that you want to look at your payroll liabilities all the time. And if it should be memorized automatically in your memorized reports. But if it's not, you just go down to employees and payroll, and it's sitting right there. And I'm hoping everybody knows that when you pay a source deductions, you must go through employees, payroll liabilities, payroll liabilities, because that links in to this report, and this report is what tells you if you have made a mistake. Sometimes if you've paid your payroll liabilities, an employee comes back and said, you screwed up on my paycheck, and can you please write me another one? I need it. I don't want a retro check. I need it. Well, that just takes your payroll liabilities out, and then you have to pick that up on the next one. And how I would do that is I would go to employees, payroll liabilities, pay payroll liabilities. And when I do that, when I want to pick up old stuff, I take it back to the beginning of the year. And so I'm grabbing that one here along with any of the other ones that are current. And then I can pick it up, send it over. I usually do a review. And another troubleshooting thing, if I have to troubleshoot, this remittance, this detail stands out big time if I have to do a detailed report and troubleshoot. And if I take this now and I remove it, see how it's been removed, and now my balance is 0. So it stays there. It got picked up in August, and now the total balance for the year is 0. So that's another. So I'm cross-checking all the time, guys. I'm cross-checking everything all the time because we can't take it for granted that the data entry is the data entry. We want it, if you cross-check a lot, you're going to get really, really intimate with the file and how everything's working behind the scenes. And do not be afraid to look at all these reports and do they make sense? You know, is everything reasonable? If if I see tons of money in the bank, but a loss, do I have an issue? If I see a big loss, a big profit and hardly any money, do I have an issue? And so, and that could be double postings and receivables. It could be all kinds of stuff, right? So that's the key to things, is just keep looking at all your reports. And that just helps the cause of knowing everything on an intimate level. And it really helps you sleep at night too. Is there any other questions?
Yeah, I have one, Sandy. It's Dawn again. So what happens when I send out an invoice for $50 and the client comes back and sends me $55 because they want to do a $5 tip? So what, now I've got all kinds of these little credits sitting on client accounts, and I don't know what to do with them because it doesn't reconcile with my bank if I only put in what they owe.
Sure. So you could very easily, I just hit the wrong thing. Give me 1 second. You could very easily, if they overpaid, I'm just going to grab one. I'm going to grab this one. If they overpaid for a gratuity, you can very easily open up the invoice and gratuities. Start a new item, service, gratuities. Pick an account. You can make it any revenue account, and I could even come up here, add new revenue gratuities. And then you can just, I would probably go that plus gratuities. And there's probably no HST on that. And then you would make it the amount that they sent you. And so you can very easily just open that up, and it might affect revenue, but it won't affect HST because there is no HST on a gratuity, right? So you could easily do that. In order to fix your open invoices right now, because you have a bunch of credits on there, you could say you had a bunch of credits on your open invoices, then you could just add up the amount that they have, pick today's date, pick the customer number or the customer name, and say it was the 22nd, and whatever that amount. So what I'm doing is you got credits. So now I'm creating an invoice for the gratuities. I'm creating an invoice, and maybe it adds up to $120. And so what's going to happen here is you created the debit. So when we create an invoice, it's debiting receivables, crediting revenue. So you could turn around and that $20 is now sitting here. If I pick the right date. The 120 is sitting here. And if you had a bunch of credits here, then this total will be 0. And then all you have to do is go to customers, receive payments, call up Zimmerman, you'll see the 120. And then right here is going to be all your credits. All your credits will be sitting here. They're not here because I don't have any, but they'll all be sitting here. And you just go click, 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 click all the way down. You say done. It would go to 0, and you just clear this guy off and clear them. And so that's a little tricky. So let me just do that one more time. So you create the invoice for the amount of little credits that you got, and that is the debit against all those credits. Then what you do is you come in to receive payments, and unfortunately you have to put in 120 first. It will click on that. Then you go up to discounts and click on credits, click them all off. It will go to 0. So you're good here because it's going to go to 0 here. But the only thing you have to remember, which is a little finicky, before you save and close, you have to hit 0 there, because that would be 0 to this 0. And then it would clear off. I can't do it because I don't have any credits. And it would clear off your open invoices and it would all be gone. So it's just like this big, massive mistake right here. That's a perfect example is we got a bunch of credits and stuff like that. And it equals to 11,617.29. But all these guys need to be cleared off of this guy to have a clean, clear, open invoices. So I'm always managing this guy and I'm always managing unpaid bills. And I would say, Dawn, look at the video when it comes through, because that's a fast way of looking at it, but that's how you fix it. But it takes, I always say to my clients when we have to do this fixing, you know, you do 10 or 15 of these things and it'll get set in your head, but that's a tricky one. That's definitely a tricky one. And sometimes I have to stop and think and try it and play with it. But that's the way that's how you clear off your open invoices.
Okay, but so it doesn't show up in a bank reconciliation or anything because it's not going into the bank.
Correct. So you've received, say you're expecting $120 and you got $125. So you've received $125 off of the AR. The credit is going to be here. The credit, the error, the overpayment is here. It's not in the bank.
Okay.
Yeah.
Okay.
Yeah. So your bank's good. It's your receivable that's off.
Okay.
Cool. All right. Christina, we're sitting at 8:30.
Yeah, I don't have any more questions in the chat, but we will be sending out the recording. Please bear with us. It might take a couple days here, but we will get it over to you. And I'm going to send Sandy's information as well as our Business to Bruce team as well. So if you want to talk to someone on our team, if you want to connect with Sandy again, we'll have lots of opportunities for you.
Great.
Perfect.
Thanks, guys. I'm very
Thank you so much, Sandy. Really appreciated it.
I'm really happy we didn't lose internet.
Me too. No, always learn lots, really appreciate it. And hopefully everyone listening today can join us for the next sessions in payroll.
Excellent.
If that's applicable. Thank you.
Awesome. Thanks, guys. Bye.
Take care.